We start tonight, however, in West Africa, where Nigeria is pretty optimistic that it will be able to maintain its growth momentum despite political and security challenges and its legislators' failure to approve the budget for the 2014 fiscal year. The country's finance minister told members of the country's private sector that Nigeria's government will prioritize infrastructure investments in 2014, as well as raising oil revenues and boosting saving systems. Now, previously, legislators have failed to pass the budget, mainly due to differences in benchmark oil prices. You see, Africa's largest crude producer relies heavily on oil and gas revenues to finance about 80% of government spending and 95% of foreign currency earnings.
The 2014 budget, we have a number of policies and also sort of indicators that will keep the budget. We have a theme of fiscal consolidation with growth, which means we are going to direct the budget to those sectors that will give the most growth in the economy. We will tighten, but at the same time we'll prioritize. So all the infrastructure sectors are top priority for the president, and the budget will go towards supporting those sectors. In power, it will be transmission. We're already channeling quite a lot of resources into transmission. We need 1.9 billion emergency plan for transmission, and we've raised 1.5 billion already.
Also on the continent, the United Arab Emirates is in talks with Egypt to plan for petroleum supplies which it will be pumping into the country in 2014. Now, along with Saudi Arabia and Kuwait, the UAE has provided an absolutely critical $12 billion financial lifeline to Egypt after Mohamed Morsi's ouster earlier this year. Now, there have been doubts over whether the loans and grants from those countries will continue in 2014. But the CCTV's Yasser Hakim now reports the latest talks and the Gulf Cooperation Council Investment Forum held in Cairo this week have proved a more positive outlook.
Egypt needs $24 billion per year to pay for its subsidized petroleum consumption. It self-finances half the amount, but the other $12 billion are a huge burden. It had to borrow to cover this deficit. The Emirati request to finance Egypt's petroleum needs in 2014 has come as a lifeline. Officials say, however, the support will be conditional.
The support will not be forever. We must make our own reforms to sustain ourselves. For example, Egypt subsidizes petroleum and it consumes a third of our annual budget. We are working on gradually reducing subsidies and spending more on services and new projects that vitalize the economy. Our aim is to reach 4% growth.
The Saudi, Kuwaiti, Emirati recent support doesn't only relate to petroleum products, but also encouraging more investments to Egypt. One is A'mar Properties, the Emirati real estate giant with $8 billion investments in Egypt.
You have to have obstacles in your business. That's fact of life. So I think I'm telling investors that, be quiet, get on with it. You have issues wherever you do business. If it's really in London, to get your building permits in Toronto, it takes you 6 years. In Egypt, I get it in 6 months.
A GCC investment forum in Cairo last week attracted 500 Arab businessmen who wanted to study the Egyptian market and government plans for the future. Experts say immediate results might not come out of this forum at this point, but this could be a good base for investments to be lured into Egypt once an elected president and parliament are put in place. In the meantime, Gulf states' investments are currently the highest at $49.9 billion. That's a 20% increase in 2 years. It's a strong sign of intent when other countries are shying away from Egypt.
Well, of course, you have two types. You have the type that is doing business in Egypt, understand the environment, have seen the change the past months, believe in the market, so they are moving on and investing. And you've got the type that maybe still want to wait and see what exactly happens. I think they will miss the boat. They better jump in as soon as possible.
Going into 2014, in spite of the political instability, Egypt can still feel safe in the backing of its oil-rich neighbors for now. Yasser Hakim for CCTV, Cairo.
Let's expand this conversation and reel in CCTV's Yasser Hakim. He's live in Cairo tonight. Miriam Bemal, on the other hand, is live in London. Thank you very much for your time this evening. Yasser, let's start with you. The last two stimulus packages Egypt has announced in the last couple of months have both been financed by debt. And there's a third, of course, that was announced today. So really, for how long can Egypt continue to rely on external funding of this sort?
Well, they can't for long. Even the United Arab Emirates said they will not help Egypt forever. The Egyptian government itself said they cannot rely on debts and loans forever. But we can say that at least Egypt is covered until next June. The fiscal year budget is until June, and the United Arab Emirates and the other Gulf countries are having a big say into this budget with a big impact on it. By June, there would be a new president, there would be a new parliament, and I think by then Egypt should start to rely on itself, on its own income, on more revenues. Maybe by then things will be better. So 2014 could be the crunch year for Egypt.
Indeed, June 2014, 6 months away. The clock really is ticking here, Mariam. But with regard to Egypt's investment environment, what material changes have been made to make it more attractive to foreign capital?
Well, I mean, Roma, for one, the government will spend another $5 billion US in January, and that alone means that there is some confidence within the government that things can come into play and Egypt's economy can actually become stronger. That, coupled with a new constitution coming into play mid-January, creates a more stable environment for investors. Of course, granted that it needs to go through, the constitution is pending actually on a referendum, but there's growing expectation that it will be supported, along with financial backing, of course, by the Gulf states. And with Egypt's Ministry of Investment aiming to attract about $25 billion by June, which is the deadline, it's really a question as to whether or not investors are convinced that, you know, practical steps have been taken to reform policies on investment, like adjusting the investment law, providing insurance, and changing the legal barriers for foreign money.
Indeed, Yasser, let's look at the profile of Egypt's public debt. 3 stimulus packages, all of them well in the order of several $1 billion. What is Egypt's debts looking like right now?
These stimulus packages are financed mainly by the Gulf countries as well, so it does not affect the public debt. On the contrary, it will have a positive effect because the money is used to establish new projects. These projects will move the economy, will make a lot of production, will have a lot of impact on the production. This means more sales, more taxes, thus more revenues for the government, and so less debt. So what the government is saying that these stimulus packages will have a positive effect on the public debt.
Indeed, Keynesian economics at play there. But finally, Mariam, Egypt's investment minister is saying that the country has attracted about $9 billion in investment so far. But how much of that is directly attributable to these 2 prior stimulus packages?
Well, Roma, you know, experts on this end want to see Egyptian officials can actually raise growth. That's where we need to see. They're predicting that it'll be at 3.5% by the end of June, and also lower the budget deficit to 10% of GDP this year. That will be a challenge, given it, you know, boosted government spending by about 36% to about $13 billion this year. Investors need to see if the government stimulus program can also help boost domestic consumption and support demand for internal economic growth, and encourage private sector involvement to actually help fund minimum wages and perhaps strengthen the standard national wages as well.
Indeed, we'll have to leave it there. Always lovely having you two on air. Yasser Kim in Cairo and Mariam Bimard in London. Thank you very much for your time this evening. Let's move on to Togo. Traditional fabric vendors in the West African state saw an enormous payoff in the last 10 days of tribute to Nelson Mandela. The vendors named one of their popular fabrics Madiba in honor of the international icon, who was buried barely 24 hours ago. Now, the Madiba fabric bears the image of the former South African president, and vendors in Togo say it commemorates his life right across Africa. Mandela's death, along with more than a week of tributes, has seen the fabric flying off store shelves as many Togolese citizens rush to acquire their own memento of the former freedom fighter.
After the death of Mandela, I thought to immortalize his name, we must give his name Madiba as a traditional name for this fabric.
I like this fabric named this man Madiba, the great man who fought for Africa. We gave his name to the fabric so that his name lives forever.
I came to buy the fabric dedicated to Nelson Mandela. It will accompany him to his final resting place.
And just about 1/4 to the top of the hour, we're taking a short break, but there's plenty more coming up. China will aid South Sudan to reconstruct its infrastructure. We'll have the details coming up shortly. Welcome back. We come back with a story from Kenya where a bidding war is underway for Rare Pingo. It's a sisal grower and processor listed on the main market segment of the Nairobi Securities Exchange, and it's smack in the middle really of a pretty intense bidding war. We're going to run through the bids in detail right here for you, starting of course on the 12th of November. Rare Trading Limited made a formal takeover offer for the 43% of the firm which it doesn't already own at a price of about 40 shillings a share. Now, roughly 60% of its offer price of just over a billion or so shillings is actually going to be financed by an $8 million loan from the Commercial Bank of Africa. This, however, was only the start. On the 2nd of December, Centum, a listed private equity firm, also the NSE, made a counter-offer to Rare Pingo shareholders. They essentially said, look, we'll buy the firm outright, but at 50 shillings a share. Now, beyond, of course, that 25% premium that Rare Trading, of course, is offering, Centum says, look, we'll not delist the company, which is essentially what Rare Trading wants to do. We'll keep it listed. The thing is, though, the story wasn't ending there at all. On the 10th of December, another bid came in, and this time from Dilesh Bid. He's a Kenyan investor, and he's offering to buy out Africa's largest sisal producer at 55 shillings per share. Now, he says he doesn't need any bank financing for his bid, which is 10% higher than Centum's, values the company at slightly over $38 million. And like Centum, he plans to keep the firm listed on the NSE if his bid is accepted. The thing is, though, with all the takeover offers we've seen at the NSE so far this year, none has attracted this much attention. The question is, why? Well, here's the thing. If you strip away all the sisal and the key asset really on Rare Pingo's books is the nearly 70,000 acres of land which it owns in Kenya and in Tanzania. Now, whichever way you look at it, that's a significant launchpad for entry into wind or biomass of a variety of agricultural products and real estate. Remember, that's providing some outsized returns in East Africa and based mostly on the land and a few other assets on top of that. Nairobi-based AIB Capital argues this company could actually be worth about $77 million. And that figure, as you might have seen, is actually way higher than any of the three bids so far. Let's get some analysis on this. Johnson Derry is the manager in charge of corporate finance and advisory at ABC Capital, is live in studio with us tonight for a bit more analysis on the matter. Johnson, thank you so much for your time this evening. Let's pick up where those charts left off. What exactly is the net worth of Rare Pingo, given, of course, the figures that we're seeing and the bids, but we're looking at the key assets and liabilities on its balance sheet here? What's the real value of this company?
I don't think you realize how tough that question is. Because depending on who's investing in it, you'll have very different numbers. For example, financial investors in the Nairobi Stock Exchange will buy it at what the average other financial investor will buy it at. However, the story changes when it comes to a strategic investor who has certain. He's got the capacity to squeeze out more value than he can see. Now, as you've just put out in the slideshow you had earlier on, it depends. You've seen that everybody there has got probably muscle to do one thing or another with the company, and this is what the strategic investor does. And on that basis, then perhaps the best person to value is the person with the highest bid. And so we'll sit and wait to see if there's another bid coming through.
Indeed. We have seen other take-private offers on the NSE, Dimension Data and Access Kenya being one, CMC being another. But what is it about Rare Pingo, an agricultural stock, that makes this so valuable, getting all this attention in the span of a few weeks?
Well, the other takeovers are in largely very niche areas. CMC with its automotive, Access Kenya in ICT. So the people who actually will be knowing what they're doing in those sectors are not as many. However, when you're coming to real estate, which is really, in my opinion, what the various bids are angling at, the 70,000 acres you mentioned, almost any investor who can acquire that land will probably have an idea of what to do with it, and therein lies the inherent value of the whole. Because what I'm trying to say is, in this case, probably the sum of the parts is greater than the whole. So if you can carve out some of that land and develop it differently, other than sisal production, or you probably might be able to squeeze to generate more value than there is what is available in the land.
But,
so,
but surely, I mean, the sisal business must have some value. This can't be all about 70,000 acres of land, is it?
Well, again, how much income are you generating from sisal business vis-a-vis, or what if you convert it to something else that perhaps you think, maybe an industrial park, maybe a golfing ranch, who knows? That really is in the business plan of the guys who are taking over. So therein, that is where the true value lies. Not what is right now, but what could be.
Indeed. We'll revisit that in just a moment, but let's examine the bids in a bit more detail here. Some being financed by debt, which is the case, of course, with Rare Trading's offer, about $8 million worth of that coming in from the Commercial Bank of Africa. But what are the pros and cons of an LBO in a market like Kenya, where credit is, well, for lack of a better word, pretty expensive?
Well, it also depends on the expected annualized return on investment. So if you've got a company that is able to generate the cash flows to pay out the debt, then that might work. And we've seen expansions which have been used where very expensive debt has been used, 15, 16, 17%, they've been able to generate good returns, and that's because perhaps you're talking about return on assets of plus 20%. So it can be done, but that again largely depends on the performance of the investment, or the expected performance of the investment.
Indeed. Unfortunately, we have to leave it there for the time being, but thank you very much for your time as always. Johnson Derry from ABC Capital there. Let's move on to South Sudan. The government of China has pledged to help Africa's newest country to develop its infrastructure, strengthen government institutions and extend key government services to its citizens across the country. South Sudan has encouraged members of China's business community to increase their investments in key sectors of the economy, and it did so during the China-South Sudan Development Forum, which was held in Juba. Speaking at the event, the Chinese ambassador to South Sudan said China would help in the expansion of the Juba Teaching Hospital, which is currently the only referral hospital in Africa's newest state, among other investments in an oil-rich nation.
The Chinese investment activities in South Sudan have been kept very active, with a total amount of $5 million. The Chinese government decided to offer a grant of about $30 million to the South Sudanese government this year, and preferential loan agreement will be signed by the two countries.
They say a friend in need is a friend indeed, and I think this is what China is doing. We are in need of development. We have in need of dividends for our long struggle for the independence. We want to translate it into services to our people. And China has come forward as a real friend in the time of our need to come and help us develop our resources, like the development of oil sector is a big thing, and I think South Sudan is rich of natural resources like agriculture, and I think this forum is going to address other potential areas like sugar industry, cement industry in our country, agricultural industry, hydroelectric power, and I think China is qualified to do so.
South Sudan's health minister there segging us neatly into the markets. Lots of red ink here, unfortunately, today. The Nigerian Ultra Index providing the only green numbers on the board. The main trend to look forward to, however, is the fact that there's a lot of NDA selling and consolidation taking place, which explains the numbers you're about to see. The All-Share Index in South Africa down on the day, albeit a bit marginally, down 0.15%. The 20-share index in Nairobi barely changed, just treading water really at 4912.36. In the Egyptian market, despite, of course, the announcement of that third stimulus package, in the red, down by about half a percentage point. We'll have more business news from the continent for you at 10:00 GMT. See you then.